So what will those three things show? Your profit and loss, your balance sheet and your statement of cash flow. It'll show whether any expenses are rising or falling and what maybe if there are areas that you can save. Does that company really need to pay 300 grand for advertising, or can they now start to rely on word of mouth? Again, is your profit margin comparable to the industry that you're in and probably the trade and the area that you're in as well? What your balance sheet will show you, your current assets, current liabilities, whether you can pay people on time. Are you collecting money from your clients in a timely manner? As I mentioned, I worked for QBCC for 33 years. I love my job, I love what I do. If they don't pay me tomorrow, I'm not coming into work. I can tell you that right now. So my message to you is value what you do, value the work that you do, and if it's a day late, chase it. Don't wait 6 months, don't take on that next contract. And I get it, I work for government, my salary is safe, I'm very risk adverse. You work in a different industry, it's very risky, but make sure you know the mechanisms to chase that money. And there are a few available. There's the money's owed complaint, you can stop work, suspend work, adjudication claims, there's charges over properties. There are a number of mechanisms that are available to chase that money. Don't wait until it's too late. Do you have too many external finance sources that are really high interest? I can tell you that ATO, I think they're sitting on an 11% interest rate. If you have to go into a repayment arrangement with them, banks are a lot higher. Are those debts that you can start extinguishing, getting rid of and getting out of so you don't pay that interest rate? I know that ATO was in a hiatus over COVID. They weren't chasing their debts as aggressively as what they were. I can tell you they are now. They're up to, I think it's almost a $5 billion tax debt that they're trying to bring back in. In my line of work, I do active financial audits, and a builder let out and said to the ATO, I owe you 174,000 ... whatever those dollars were. Can I enter into a repayment plan? And the ATO said, yes, of course. Your payment plan is you pay me 174,000 ... on Tuesday. So the ATO is very aggressive in chasing their debt book. They may not always be as aggressive as that. That's the worst one I've ever seen. But they will, if you negotiate with them, they're more likely to enter into a payment plan with you. Again, your statement of cash flow will show essentially what cash you've got coming in, what cash you've got going out. It's very likely that that company that went from 1.9 to 4.4 has a negative cash flow. That may not necessarily be bad for your lenders or your financiers. You've just got to be able to explain how that became negative and what you're doing to get out of that. So maybe next year you don't have that negative cash flow.